Good evening, traders. This is the FX Big Dog, and welcome to once again another market update. If you have any questions regarding this review, please email me, and the address is analysis@infinitumfx.com, or do a private chat by clicking onto our online support link on our website. Don't forget, traders, that you can follow me on Twitter. Just search the name FX Big Dog or Infinitum FX. Of course, that'll be on the Twitter website. Important disclaimer, traders. Trading the forex markets is risky and only intended for investors that understand and can afford the risk. Note that this video presentation is for educational purposes and not offering trade recommendations. If you choose to follow a trade presented in this video, it will be at your own risk, of which we accept no accountability. We are in the agreement that all traders have a full understanding of the risk and are responsible traders. Please do not trade live unless you have traded a successful strategy on a demo account for a good period of time. Alright, traders, now that we've got that through, let's go straight to the market. We are looking at the Great British Pound, the daily time frame. We see that the market closed out pretty bearish from today's early morning rallies. It closed out bearish. You can see it took out these double bottoms right here, and it's on its way to the D extension of this crown on this daily. Remember, it pulled back to the 382 bounce, so we're expecting it to chase after the D extension here at 5800. So we're well on our way, took out the lows, we're well on our way towards that D extension according to the daily time frame. Remember, if I go ahead and compress the charts, you'll see, now I've compressed it a little bit too much, you can see the 382 bounce is right here. 382 bounce is converging with this D extension of this crown short-term swing. Now remember that 382 bounce is the intermediate swing, and we are now looking at this down crown swing as the short-term swing. Looking at the 240 time frame, we see that we are bearish on the 240. We spotted these tweezer tops early on today, and of course the market did go up slightly, retested double tops. Sorry, I said tweezers, but I meant double tops. It's not tweezer tops. We don't have this candle right here confirming as a tweezer, so we have double tops forming here at the 382 bounce. We are in a bearish down AB swing of the short-term swing. The B low was very significant, and you can see right now we are trading below 61.52. We're chasing after the D extension, which is down here at 58.59. That will be the D extension of the short-term swing. Remember, traders, as long as we are trading short on the short-term swings, we are in retracement of the intermediate swing, which is bullish, by the way. Of course, if we hit the D extension of the short-term swing, we will be taking out this low at 58.83, which is quite significant because it is an up AB swing of a previous intermediate swing. Let me go ahead and compress charts. There it is. You can see the intermediate swing comes from the 59.82 to the high at 70.40. Okay, that'll be your intermediate swing. Moving on to the short-term swings of the 60-minute time frame, we can see that we are bearish on the short-term swings. There it is there. We're bearish on the short-term swings. We've got an AB swing coming off 63.75 and 61.12. Now, a lot may say, well, FX Big Dog, what about the high that we have right here? And that high was at 62.66. If you spotted that high and you drew your fib levels to the low at 61.11, you would have noticed that the market did form a new inner swing inside that short-term swing that pulled back to the 382 bounce. There it is there. It's a 382 bounce, and of course if it takes off from the 382 bounce, which has given us a pretty strong bearish move already, if it takes off and heads towards the D extension, it will be down at 60.17. Okay, the reason why I never mentioned it today is because remember we are coming off the high at 63.75, and of course we're looking for a B low to confirm our swing, our current short-term swing. And as you can see, let me delete those fib levels. As you can see, we did not have a low at this point because we didn't have 2 to the left, 2 to the right. We need to confirm a low point. We did not confirm a low point right there. We needed the market to confirm a low point, and we only got the low here at 61.11. So you might be asking the question, are we on our way to the D extension without pulling back to this 382 bounce at 62.12? Well, there's a possibility. And if it does take out the B low and head towards the D extension, it should be quite a quick move, as we've come well short of the 382 bounds and we'll be heading for that D extension. But we'll have to wait and see what happens in the development of the European session. We've got a couple of fundies coming out in Europe, and of course in the UK, sorry, not the UK, the US, as well as, of course, don't forget, 2 o'clock tomorrow Eastern Standard Time. That'll be 2 p.m. Eastern Standard Time. We have the FOCM meeting or minutes coming out as well, so watch out for that. The Fed minutes are coming out at 2 p.m. Eastern Standard Time. For now, traders, stay bearish, look for those downward swings, remain within the downward swings until we get a bull crown set up on the 60-minute short-term swing. This is the FX Big Dog wishing you joy, peace, and successful trading.